Hello guys, welcome to my channel Study with Gitanjali. So today I am going to discuss Economy PTT 365 from the Vision Eyes Current Affairs section. So the first our topic is status of government finances. So here we need to just know the trends. We are not going to by heart these digits that are given here. We just need to know the trends and what this report is saying. Just these things. So first of all, it's saying that RBI has released this report, State Finances, a study of budget of 2021 to 2022. So theme of the report is coping with the pandemic at third tier dimensions. So you need not to remember this. No one is going to ask in the paper that what was the theme of the report of the RBI. You just need to know the highlights. What is the situation of our states. So it is saying that gross domestic consolidated gross fiscal deficit. So consolidated gross fiscal deficit is growing for the states. Okay, this is the thing. Combined debt to GDP ratio of states means how much they are borrowing from market or from other section to their ratio of their GDP. Means if they are borrowing 10 crore and the GDP of the particular state is 100 crore, so the debt to GDP ratio will be 100 upon 10, that is 10%. So it is packed that they will borrow states of 30 at the end of 31st March 2021. They are going to cross their limit of 20%. Okay. And then ratio of interest payment to revenue received means how much revenue they are gaining and how much interest they are giving. See, if they are getting 10 crore as their revenue, means as their income, and they are giving interest on and if they are giving interest on the borrowing is 2 crore, so what is the ratio? 10 upon 2, 5%. So it's growing and it is decreasing the sustainability of debt. So market borrowing is also there increasing. And National Small Saving Fund, loans from banks and financial institutions and public accounts, the total outstanding liability of states have declined over the years. So their shares of National Small Saving Funds loan, so the share they are saving somewhat in National Small Saving Fund and loan from banks and financial institution, in total outstanding liability of states have declined over the year. So it is declining and they are losing local finances revenue 15 to 25%. So this is we need to just keep in mind that consolidated gross fiscal deficit is growing. Combined debt to GDP ratio of states is growing. That is set to be limit of 20% by the NK Singh committee. Then our interest to revenue receipt is growing. Then market borrowing is also growing. The share of small the shares in small savings and all, and it's declining, and they are losing over the revenue of the local authorities. Other trend in finance we will keep in mind, increase in fiscal deficit that we are seeing from the cross domestic consolidated gross fiscal deficit only. So increase in fiscal deficit, increase in aggregate public debt. Okay. And then states own tax revenue is the largest state source of revenue. So if you will ask what were the largest source of states revenue, so states own tax revenue is the largest source, not the grants and the borrowing. Okay. And their lower property tax. This is the thing we need to keep in mind from this fiscal policy and inclusive growth section of the status of government finances. This is RBI's report. So we need to just keep in mind fiscal deficit is growing, there's small savings is decreasing, and then interest payment is increasing, their aggregate public debt is increasing. This much we need to keep in mind. This section, that sources of states revenue. So sources of states revenue we have learned from the basics only, that states take states revenue is from from two sources, tax revenue and non-tax revenue. Non-tax revenue is का dividend and profit their PSCs and all administrative services they are operating. So this is the non-tax revenue. Tax revenue, states own tax revenue, just as taxes on incomes as personal income, taxes on property and capital transactions, and non-tax revenue are tax devolution from sector, the taxes they get from center, as we are the part of GST we have seen. So tax revenue of center. These are the two sources from where states gets revenue. And third one is grants from union government. This disaster relief grants states can get, grants for local bodies they get, okay. Revenue deficit grants also they get. So this is the grant sources of states revenue. This is the basic you need to keep in mind, okay. If in PT it if in PT they ask what was the sources of states revenue, you can just answer the questions. So this is the basic that we have already you have already read in your economy part. So this is the basic, and what are the steps taken by government or center or RBI to support states. So reform linked additional borrowing space for 2020 to 2021 means they have increased the limit of states to borrow. So from 3% to 5% they have allowed that state you can borrow up to 5%. Then second is special assistance to states for capital expenditure for 2021. So in this there are the states that government has allowed that they can borrow up to 15,000 crores for the period of 50 years. So this is allowed. Health sector, we have already know that national health scheme. So national health mission, the grants has states has given, so its grants comes to at 80,000 crores, okay. Certain relaxation also provided with regard to availment of overdraft facilities. So for the availment of overdraft facilities states have provided certain relaxation also. So ways and means and advanced limits of state are also enhanced, means from the ways and means from the states can borrow or the stability of the states, it is also enhanced by the RBI. So this is governed by the RBI, okay. So what can lead to balance and of payment decoded, means what if balance of payment is there. So what are the influencing part of the balance and payments, and what it can lead to of balance and payments. So these are two sections you all have already read in your basic part. Now this one is government securities. So now RBI has allowed the retail investor, means investor like you and me, to invest in government securities. So this is the scheme launched by RBI, is a retail direct scheme. So government security, or we already know that it is a tradable security that we can trade. So now this what is there, two types. This is the basic part about government securities, okay. So we have already read in this, so we need not to spend our time over here. We have already know the treasury bills are of two types, or 91 days maturity period, 182 days maturity period, 364 maturity period, okay. And dated security are the security for the fixed term from the year for the 5 year to 40 years, okay. Benefits of government security. How can just operating mechanism of government security RBI use, ठीक है. The platform are there, Kuber core banking solution platform of RBI है. Clearing agency, Clearing Corporation of India is also platform of RBI. So this is the things. We need not to go in such more details of each nuances. We just need to know that RBI is allowed retail investor to invest, and they can invest as primary investors also, as secondary also. So they can also buy, and they can also buy from the secondary. Earlier they are allowed to buy only from the secondary market. Now how can they buy? They will open a gilt account with the RBI, and from there they can buy, okay. So here initiative are written that RBI direct scheme for individual investor to bid in primary auction, buy and sell government bond. The bonds on offer are government security, SDLS and sovereign gold bonds. ठीक है. No fee will be charged for the services provided and thus की government security acquisition program from RBI with aim to purchase government security worth rupees for the first quarter of financial year 2022. Long term repo operation with RBI to provide 1 year, 2 year money to bank with the prevailing repo rate, accepting government security with matching or higher donor as a collateral. So this will allow the banks for healthy functioning at the prevailing repo rate. So this is able by government security. As we already know, operation twist to buy and sell the government security. सो यू नो दैट आई एम फर्स्ट टाइम, पहली बार इसको पढ़ रही हूँ. मैं भी पहली बार पढ़ रही हूँ क्योंकि जब हमारे बेसिक्स क्लियर होते हैं तो ये जो पार्ट होता है हमारा इकोनॉमी का और पॉलिटी का, ये बहुत जल्दी कवर होता है. तो वी नीड नॉट टू गिव मच टाइम टू इट बिकॉज इट्स सच अ सब पार्ट ऑफ आवर बेसिक पार्ट. ओके, सो दिस इज द थिंग. So here it is related news is given there, the global bond index. So our government security are soon to join global bond index. So what are the global bond indices? So these are global bond indices includes investment grade and government firm from around the world. So means कि सारे पूरी दुनिया के लोग यहाँ पे अपनी गवर्नमेंट सिक्योरिटीज़ बेट करते हैं. तो ये मोर देन 1 ईयर के लिए होती है और यहाँ पे सेंट्रल और स्टेट गवर्नमेंट अपनी सिक्योरिटीज़ प्लेज कर सकती हैं. तो हम पता है कि रिस्क गिल्ट इंस्ट्रूमेंट्स कहते हैं गवर्नमेंट सिक्योरिटीज़ को. तो हमें बेनिफिट क्या देगा कि जो हमारे फॉरेन इन्फ्लोज, सो it will attract the foreign inflows, means the government will get investment or we can say the currency or such inflow from the outside foreign sector, so it will attract foreign inflows and it will reduce pressure on bank to buy the government security. As we know that the RBI has made mandatory for the banks to keep some amount as with them as an SLR, and they have to keep some amount as government security. So this will reduce their burden. Okay, and it will give strength and stability to Indian rupee, and government is market borrowing program, and it will also give government as one more option to borrow from abroad. So this is the thing. So here is ownership of Indian government bonds across key holders. So how much one buys, who are the holders of government bonds across the securities. So here it is again, the commercial bank by 38% of government securities and bonds. Insurance companies 25% buys. Reserve Bank by 16%. EPFO, ठीक है, they buy 4%. Cooperative banks buy 2.1%. Foreign investor buys just 2%, and others 13%. So commercial bank, here we are saying commercial bank and insurance and reserve bank, these are the three main key holders of the government securities and government bonds. So here is the news of, so this is the taxation part, retrospective taxation. What is the retrospective taxation? Means if you are taxing a property in the back date, okay, so this is the retrospective taxation. Means if I have bought property 10 years ago and government said that from now onwards they have made a law that from, means I have bought probably 1 January 2010. So government said the one who has bought property from 1 January 2010, they have to give 10% tax on the property. So now this is the retrospective term, the back date. So in the recently Parliament enacted Taxation Law Amendment Act 2020-21, government has nullified Income Tax Act 1961 and Finance Act 2012, so scrapping the 2012 retrospective tax laws. So what was this tax? This allowed the company item service deals and charge company from a time behind the date on which the law is passed. Okay, India, it was introduced in 2012, so it was empowering income tax department to raise tax from the indirect transfer of asset located in India. If asset is located in India, if two companies are buying over there, means if one company is established in UK and one is in Belgium, if they are buying and taking they are buying and selling the assets, and asset is located in India, so it says that it is indirect transfer. So it has nullified the tax and said that no need to pay tax for the retrospective law, and amount will be refunded if you have paid the tax without interest, but taxes will apply after 20th May 2012. So this will make our country more transparent, stable, predictable taxation regime with a positive sign. So here is a right to tax is sovereign power. So tax disputes are held by investor state dispute settlement tribunal are there, but we also sorry where it we are now, page number 12 आ गए. But this bilateral investment treaty also puts certain limits on right as expropriation, that is no confiscation or claim on property against owner wishes from government, and fair and equitable treatment of taxes. So this is the limit that bilateral investment treaty puts on us. So this is there is nothing to be seen in that. This is just in a case that we came across few days back or few years back. From this only this retrospective taxation has amended and nullified the section 9 of IT Act 1961. Now this is the section global minimum corporate tax rate.